So there are 11 main different sectors in the Australian share market that are classified under the Global Industry Classification Standard. So when you're curating your profile, if you're buying individual stocks, you want to try and get a really good diversified portfolio. Now that not only means different companies, but it also can mean different sectors. Usually that's because different sectors react differently in different market conditions. Even when the stock market is going down, some companies do still go up in different sectors. Now you don't need all 11, having 5 or 6 is good, but I thought I'd go through each of the sectors one by one in 11 videos and go through the best companies in each of the sectors. Some sectors only have a few different companies within them, and some sectors have hundreds of different companies within them. So let's start with energy stocks, a nice easy one to start with, and the first one on our list from this page. Now looking at what the best companies are going to be is going to be different for each sector, because normally I'm a dividend investor, but not all of these sectors have companies that pay good dividends. So let's look at just a few overall things, like how much the company growth has been, how much the sector growth has been, and of course if they do pay dividends, I'll be looking at that as well. So for my research, I'm going to stick with the larger companies. So I'm going to use a baseline of market capitalization of 1 billion or higher. That gets us close to the ASX 200. Some might be just under that, but they'll be the biggest companies within Australia by market capitalization. So let's go with energy stocks. Energy stocks have 138 companies, but we're only going to stick to the top 13, the ones that have a market capitalization of over 1 billion. Let's jump on the computer. Let's just look at the energy index overall compared to the overall general market. So you can compare this index to any of the others, but we're just going to compare it to the ASX 200. Looking at the 10-year graph, you can see that even though it follows quite predictably the same similar pattern to the ASX 200, there are some differences that I want to point out. The first is the period between 2016 to 2020, as the share market was going up. While still going up, was not growing and increasing as fast as the general market. More recently, as the general market has flattened off and even decreased a bit, the energy market seems to be actually increasing, which means it probably does quite well in bear markets. Actually decreased 1.5%. So that's clear from the outlook that energy is not going to be where you would find high growth stocks. Yeah, let's go and have a look at the individual companies in more detail. So here are our companies from the energy sector that have a capitalization of 1 billion or more, and I've just put them in alphabetical order just to make it easier. Here are their dividend yields. Some of them look quite high, a few don't pay at all, and I've also put whether they're consistent or not. But as you can see from some of the ones that do have a higher dividend yield, they're not that consistent. We'll look at WHC, for example. They only paid a really small amount in 2020 and nothing in 2021. The current upcoming payment is quite large, which is why the dividend yield looks so high. I'm not sure where this would go. It's not consistent enough for my liking, so I've put that as a no. So these are the 3 that I actually really like. The one that I like the most is Saul Patterson, and the reason I like it is because of how consistent it is. Now, it's just on a strong uptrend and it just looks so beautiful. Now, the dividend yield is a lot lower, of course, than I would normally go for, but that consistency means that if you lock in a dividend yield now, as it continues to grow, if it continues to grow like it is, that maybe 5 years down the track, you might be getting 5% based on what you paid today. The other 2 that I thought were okay, but I wasn't completely sure about. We've got New Hope, mostly because even though they have a really high dividend yield now, except for one payment in 2020, they have still been paying. They are still a little bit over the top. Now, I would probably wait for the next dividend announcement, probably in the next month or so, just to see what the next one does. But like most of the other energy stocks, the reason that the dividend yield looks so high is because of the last high payment. And the other one that I would put on my watch list is Ampol. And that's again because it looks okay, but it looks like it was decreasing before that. So I would want to keep an eye on that one and just make sure that the only reason it was going down was because of 2020, 2021, which is understandable. And if that's the case, that's fine. But yeah, I'd put this on a watch list. I would need to see a few more dividend payments. Now, of course, I haven't even looked at how well the actual companies have done yet. So let's go and do that now. I've gone and filled in both the 5-year return, which I've got from Google, and I've also put in return on equity. That's what I used to use when I was looking for growth stocks. And of course, I put debt to equity in because, as you know, I don't like investing in companies with too much debt. Now, there's only 2 companies with too much debt. That was Karoon Energy and Viva Energy. All the rest are fine. So let's just concentrate on how much they've returned over the last 5 years, and then we'll just briefly look at return on equity. Now, here are the 5-year graphs, and I know they're very small. I will make
make some of them larger in a minute, but you can probably see just overall how they haven't been doing much up until, say, the last 12 months, and a lot of them have started to increase over that time. I'll show two more in detail. We can see that a lot with Karoon Energy and New Hope Corporation, where they didn't do much, or they may have even been falling, but over the last 12 months, maybe even slightly longer, they've started to increase. That's pretty typical of the energy sector overall. Or it could be that they've done nothing for a long time, and then only recently they've started to increase again, which is why the 5-year return looks so high. There's no real standouts here, but let's go on to return on equity. I'm just on the financials page for Whitehaven, and I'm looking at both the earnings and return on equity, two figures that for people who are looking for growth stocks or value stocks usually look at. Back when I was investing for growth, I was always looking for a good return on equity, something around 15% or higher, and you can find that figure down the bottom here. This one's 46.4, but as you can see, it hasn't been that consistent, which you can see from the graphs anyway. Like, it's been fine and then it's dipped. And it could be just that it was 2020, 2021 and it's gone back up again. So that's something to keep in mind. Now, I don't think any of these energy stocks are really great for growth stocks. I mean, it really looks like they have been, but they've only been increasing over the last 12 months. Now, even though I don't love all of them, if I had to pick one company that was most consistent in both growth and even dividends, it would be still Soul Pattinson. We can see that it has increased and then again increasing from about the start to mid from 2020. It has dipped a bit since then, but it seems to be most consistent out of the graphs. And if we also look at the return on equity and earnings, it's also one of the most consistent. So yeah, it's not perfect. The dividends, beautiful and stable and growing, and the return on equity and earnings also seems to be growing over time, even though it has dipped in 2021. So even though it has low dividend yield, reasonable 5-year return, and the return on equity is only 6.8%, it is the most consistent. And I always like consistency more than I do big numbers. So those are the energy stocks and what I've found. I hope you found this useful. What sector would you like me to do next? I might just pick one at random, or if someone has a particular favorite, I might do that one next. Anyway, happy investing, and I'll see you in the next video. Bye.